Let's have a look at this Foster's, well, the SAB approach for Foster's here. They've gone straight to the shareholders this time with it. What's your gut feeling?
I think this is reflecting what's currently considered best practice in M&A activity at the moment. That is to issue a knockout bid earlier, a bid much higher than the prevailing share price, but make it highly conditional. And that then gives the bidding company the opportunity to reduce the conditions of the bid, that is, improve the bid, without actually increasing the price. But it's certainly getting frothy. I think the disappointment from Foster's shareholders' point of view is that there hasn't emerged a second bidder as yet.
Yeah, they've no doubt been looking. It's gone above, what, $5 now a share. Do you think there's a feeling that they could just increase it a little bit more in order to just make sure they get it?
If they do, I think that will be the last step. The latest iteration of the bid that we've seen is conditional on a 90% acceptance rate. Now, that's a pretty rare event in the Australian corporate landscape, and I think that the next step would be to lower that threshold to 60 or 50% to then try and force our way to full acquisition.
Michael, what's your gut feeling on this one? Which way is it going to go?
Well, without another bidder coming into play, I think the deal will go through, and it's likely to go through somewhere between $4.90 and $5. Of course, all bets are off if we do see another player come in, and that is still possible even at this late stage. It is getting a little bit nostalgic with both boards getting hostile. I think that they're both doing their best to protect the interests of their own shareholders. Clearly, SABMiller are trying to get this at the best price they can. Foster's trying to extract the best price for their shareholders, so both acting in the best interests of the groups they represent.
So what we're seeing today is a flurry of M&A activity. A lot of deals are trying to be done or getting done here at the moment. And, you know, amongst this market volatility, why do you think it's happening now?
Well, I think, first of all, we've seen a great moderation in prices. Share prices are much lower than they were 2 months ago, and that, of course, makes some of the targets much more attractive. But the second is the disconnect that we're seeing in markets. At the moment, markets were sold off heavily on the back of concerns about the global outlook, the top-down considerations. And yet the reporting seasons we're seeing across Asia, around Europe and the US, indicate that companies are in much better shape than those fears would indicate. So a lot of these companies have cash on the balance sheet, and the lower prices that these global concerns have brought about have meant that it's now time to act.
Yeah, with lower prices, of course. So what is, are they thinking that prices don't fall from here any further?
Well, I would think so. At the moment, the markets are pricing a worst-case scenario. If we look at the S&P 500 in the US and use long-run ratios and averages, it's currently pricing a 15% further fall in earnings, and yet the forecast at the company level is for a 15% increase. At some stage, this has to be resolved, but what's quite clear is, from the company point of view, at the bridge of each of these companies, the view is much more robust than it is in the general market.
Right, after the volatility and the falls that we saw last week, of course we've made a comeback since then. Which way do these equity markets go, and is there going to be more of a disconnect between what we're seeing in Asia and what we have over in Europe and the US?
Well, the events of the past couple of months are a reminder that anything can happen, and just when everybody was getting bearish last week, we've seen rallies of more than 10% across the region. So it's quite a surprising and a tough time for investors and traders at the moment. I think that that bottom-up situation will assert itself as the global headwinds clear. I suspect that given the extreme sell-off we've seen, even after the recent moves up, we're in a position where the risks are clearly on the upside for shares.